Excellent. Um, so I reached out to you because I had taken one of your classes before,
Hmm.
and you had a lot of great information, answered a lot of questions that, well, a few that I wasn't aware of, and then you also gave some reminders of some things that I have not used in a while. So I wanted to, be able to chat with you again, and so thanks for doing this with us.
Yeah, sounds good. How'd you guys like to get started?
So we wrote down a few questions, and we'll just start out by just asking you a few questions and yeah, seeing, get those answers, I guess.
Yeah, no, that sounds good. Make it more of a casual conversation. Yeah.
Yeah,
Yeah,
absolutely.
absolutely. Let me turn my volume up just a little bit. Excellent.
All right. So who is all eligible for a VA loan?
Oh, sorry. Just got distracted. So when it comes to eligibility for a VA loan, it really is dependent on the person's service. So one of the things that we want to make sure of is that we want to talk about eligibility and qualification. So eligibility is how someone becomes to be based on their service to be able to use their VA loan. And then there's qualification where it's all the normal loan stuff where you have to, qualify for it, make sure your credit, income, assets all are in line to be able to afford a VA loan, right? So when it comes to eligibility, the main thing is we want to ask, how did they serve when it comes to that? So there's regular active duty members who go in, get a contract for 5, 6 years, whatever it is. For those who've gone into regular active duty status, typically in the first 90 days, starting day one of basic training, once they've hit 90 days, they are eligible for the VA home loan. So it's actually pretty quick because basic training is essentially 2 months. And then they'll have a month of specialized, generally depending on their job, MOS, whatever they call it. They will also go into a specialized training, and then they will report to their first duty station where they will serve their time. Generally, when they report to the first duty station, they will be eligible to use their VA home loan then. And
Perfect.
then you have people who are in the National Guard and the reserves. They kind of have a different, requirement just because their time of service is just a little bit different. They do generally minimum 1 week in a year. They can do more time, but generally it's either 6 years for them to be eligible to use the VA home loan, and some other requirements. Either they continue to serve, get placed on the retire list, or they are honorably discharged after 6 years. They also have to meet all the requirements for every single year and serving the proper amount of time. However, if they ever done any actual active duty time, like they went from reserves and got placed into an active duty status for a little bit, they can actually speed up that timeline before, instead of having to wait 6 years, as long as they've done 90 days of active duty time and that can't be any training. It has to be actual, maybe deployed overseas, activated during COVID relief. There's some extra requirements, but generally, if it's 90 cumulative days of active duty time in those non-training active duty time, essentially, they are eligible. And then we have some surviving spouses as well.
Excellent. That's very good. That definitely answers some questions that I didn't know.
Yeah, there's a lot of stuff. I can keep going. I mean, there's a few other things, but yeah, there's a lot when it comes to that.
Okay, no, that's very good, and you may get to explain some of those other things as we go down our list of
Mhm.
questions. But if we, for whatever reason, we miss it, then we can certainly circle back around to it.
Yeah, of course.
Yeah, yeah. So I definitely didn't know that. Essentially, it's a minimum of 90 days. That's pretty good to know.
Yeah, and that's the main thing with that is that we've been in a wartime era since the 90s. So as long as we're in a wartime era, it's 90 days. In a peacetime era, it's 181 days. So, but yeah, the U.S. has been in a wartime era since the 90s.
Yeah. Wow.
Mhm.
Excellent. Um, so I'm just going to kind of skip ahead just a little bit
Okay.
because the question that's on my mind is about the VA funding fee.
Okay.
This is not something that we've had for a long time. And can you just kind of explain the VA funding fee a little bit, and then
Yeah,
answer if everyone has to pay it, or are there some
gotcha.
people that are exempt from it?
Gotcha. So the VA funding fee is just the cost to use the VA home loan that goes back to the VA to maintain the program. So just keep in mind the VA is funded by the federal government, like that it's in their fiscal budget, and that's how they're funded. For the most part, it's not they don't have a way to generate profit really. So the VA funding fee is a way to kind of essentially have more funds available for the VA to be able to do anything they need with it. It's most specifically to help veterans, of course. But the VA funding fee, again, is just the cost to use the VA loan that's generally charged to the borrower. How it's charged is another story. Being charged, it usually gets added to on top of the loan. If you guys are familiar with FHA upfront fee, it's the exact same thing. It's just a little bit more. So a lot of people may think that, oh, the VA loan's a lot more expensive because of that. Not really, not by much. So generally, the first time the VA funding fee is about 2.15% of the entire purchase price of the house or loan amount. So, for example, if the house is $100,000 loan on a $100,000 loan, the VA funding fee is $2,150, which gets added to the $100,000, so making the final loan amount $102,150 because you're adding the VA funding fee on top of the loan. Now there's ways you can pay it out of you can, as a borrower, can choose to pay out of pocket if you want to. You can do a partial payment, whatever. And it does go up after the first time use. It goes up to about 3.3%, and then it stays there. But there are down payment reductions. So if you put in 5% down, it goes down to 1.5. 10% down goes down to 1.25. Overall, generally, I just tell clients like if you really think about the long term, it seems expensive. I'm not gonna lie, it does seem expensive. 2% of an entire loan seems like a lot. However, if you're thinking about it, let's say it's a $500,000 house on average in Washington State. That's a little over maybe $10,000, maybe $12,000 on the VA funding fee for the first time use. Then some clients may say, "Oh, that's really expensive. That's going to have a huge impact on my payment." Or can I choose to just pay it? Well, $10,000 on a loan, on the 30-year loan, only impacts their payment by like $60. So to pay $10,000, $12,000 to save $60 doesn't really make a whole lot of sense, especially if you don't have to. And there's a lot of misconceptions that people have with the VA funding fee, thinking that the seller has to pay for it. They don't have to pay for it. It just gets added to the loan. But the seller could help. If requested, could help pay for closing costs. That's one thing the seller can pay for if they choose to. So that's the main thing with the VA funding fee. However, the other cool stipulation when it comes to the VA funding fee is that veterans who have a 10% VA disability rating or greater, so just 10% or greater, then they're exempt from the VA funding fee for the rest of their lives, or every time they use the VA home loan. So imagine if you you paid the 2.15 the first time, the second time you paid the 3.3 let's say all 500,000 homes. So it's about $12,000 the first time, about $18,000 the next time. That's 30 grand of VA funding fees. You get out, you have a VA rating of 10% or more. That's literally essentially tinnitus, which the VA technically can't prove. So having that 10% or greater exempts you from the VA funding fee for every time you use the VA home loan, which makes the VA home loan, in my personal opinion, the best home loan program in the world. By having that, it's already pretty good, but having that 10% rating on the VA disability really adds a cherry on top by getting rid of that VA funding fee when they have that VA rating.
Yeah, that's very good. That was deep, but good.
You can tell I've had this discussion a lot. So
Yeah, very good.
I wanted to go back real quick. You said when we were talking about who's eligible, you said spouses.
Yep.
How can you talk a little bit about
Yeah.
how a spouse can be eligible?
Of course. Yeah. So it's a bit of a sad story for them to be eligible because it has to be specifically a surviving spouse, which means the spouse of the veteran, or the veteran passed away, right? And there's a surviving spouse. So how it typically works is that it's either that he or she is a surviving spouse of a veteran who has died while in the service, or is from a service-connected disability. The best way to kind of describe what a service-connected disability is that when veterans get out, they get a VA disability rating for certain physical or mental ailments based on what they received in the military. If they passed away due to some of those ailments that's rated by the VA, then they could pass on VA benefits to their surviving spouse to include the monthly compensation, which is called dependent indemnity compensation, but we just call it survivor spouse benefits from the VA. And then they also get the VA home loan benefit. So, and there's another stipulation if that veteran was MIA, missing in action, or a prisoner of war for more than 90 days, and yes, the surviving spouse could be eligible for the VA loan. And it's kind of a weird requirement, but one of the extra requirements is that the surviving spouse must remain unremarried till they're like 59 and a half years old. So from what I understand, based on the requirement, is basically say stay a single widow until you're 59 and a half, and then finally get married after 59 and 3/4, I guess, is a technical requirement. I'm not sure, but I'm having a surviving spouse test that limit soon. So we'll see how that works. She's 64, so she's looking to get married with him, and she's like, "Am I going to lose my benefits?" Like, technically, you shouldn't, but
Right.
yeah, it's a long time, I guess, depending on when your spouse passed away, but
Yeah.
or just married someone else who has a VA home loan benefit.
Yeah. Wow. That's a pretty deep requirement, but I guess
Strange, yeah, it's a little bit of a strange thing as far as timeline goes, but yeah.
Yeah. So another question that I have is investment properties when it comes to VA loans, and I know that I think I know that veterans can use their loans to their loans to buy a home as an investment property, or if they buy it as a home that they're going to occupy, they can then move out of it and use it as an investment property. Can you kind of shed
Yeah,
some light on that?
this is probably one of the biggest and most exciting questions that people always have, and nobody ever, for some reason, doesn't get it right. For some reason, there's a lot of articles out there, and they kind of go all over the place. Some say no, straight up, nothing with investment properties. So here's how it works. So whenever you use your VA home loan, it must be, well, I should reword it, must intend to be your primary residence when you buy the house, right? So what that means is that the story has to make sense as far as your situation to buy and move into the house as your primary residence. Okay. Now, let's say you move into the house 2 or 3 years later, you get orders to go somewhere else. This house that you have, yes, you can turn it into an investment property. You can turn it into a rental property, and that's fine. You don't have to refinance it out of the VA loan. You don't have to do anything with the loan financially. You just get a property manager. And then get someone to rent out the house, and you could use your VA loan again to buy it at the next duty station if it's in the 50 US states and American territories. So yes, you can have multiple VA loans, and you can turn a primary residence or into an investment property. I've had clients that have like 3 to 4 VA loans out right now. They live in one of the homes, but the other 3 are investment properties, but they lived in those homes at some point. So generally, the rule of thumb is that to be in the house for at least 12 months. Technically, the VA lender's handbook does not state a minimum occupancy requirement, other than the fact that must intend to be they must intend to occupy as their primary residence. But you can't just say that you're going to live in there. You have to show reason that you will live in there with orders, job offers, things like that, remote work letters, things like, you can't just say you're going to do it and then never not move into it. The story just has to make sense.
Good. Very good. So I think you answered one of my other questions. It was, can you own multiple homes in different states, that you were previously stationed in? So I think you answered that question too.
Yeah, I mean, I've actually did it in the same county I was stationed in as well. I had at one point 2 VA loans in a condo in Kingston, Washington, and then I bought a duplex about 2 years later in Bremerton, Washington. I lived in both. I lived in the condo, then I moved in the duplex, then I moved back into the condo. But at some point, the duplex became a full investment property where I rented out both sides. And then, of course, you can definitely go to other duty stations, and buy a home at each duty station, depending on how many VA loans you have now and how much you have left based on where you're going. There's a whole calculation when it comes to that, and you can always restore what you've used when you sell the property and things like that. So there's a little bit of a strategy when it comes to having multiple VA loans. The clients that typically have more than 2 or 3 VA loans at the same time are typically buying in like the Midwest, the South, places like that. They're much cheaper. Can't really do it on the West Coast unless you're buying in a very remote area, I guess. But West Coast is really tough to do that. Generally, you're buying 1, maybe 2 if you're lucky. I was lucky just because the market in Washington hadn't gone crazy yet. This was like 6 or 7 years ago. But nowadays, if you're generally buying one home in Washington or California or anywhere on the West Coast, you're generally use quite a bit of your VA loan, and you have a little bit left. You can use more than what you have left. You're just a down payment at that point.
Okay, well, that's good to hear, because I was trying to figure out if the price made a difference for the eligibility.
It does, as far as if they are going to have more than one VA loan at one time. So if a veteran is buying a house and they're called what's fully entitled. Fully entitled means they're only going to have one VA loan at one time. Then even if they're contingent, right? As an example, if they buy a house and they intend on, and they listed the house, and the house they buy next is going to be closing after the sale of the current house, even if it's a day apart, then they're still technically what's called fully entitled, because they're only going to have one VA loan at one time. Okay. If they're fully entitled, that means there's no limit on how much of a house they can buy on the next one. So if they wanted to, they can buy a $2 million VA loan if they wanted to, right? 0 down. However, if they intend on having multiple VA loans all at the same time, like let's say if they bought a $400,000 house and they lived in it 2-3 years, yes, and they intend on keeping this $400,000 house and renting it out, then they'll have to figure out how much we have left based on where they're going. So it all depends on what's called the county loan limit of where they're buying their next house and what they've already used.
And who figures that out? You, the loan officer, or will the VA figure out?
Oh, VA is not going to do anything. They're not that sophisticated. They don't get paid enough to do that. No, that's the job of the loan officer, to figure out those requirements and things like that. As far as those calculations go, trying to figure out what's left, how much they have left, their eligibility, the qualifications. That's all on the loan officer's teams to make sure they know how to navigate those numbers and understand the limits and the opportunity that the VA home loan has.
Okay, so it sounds like to me is that it's important to have a good lender that knows pretty much
VA lender. Yeah, VA home loan competent is what I like to say a lot of the times, just because.
Okay, say that one more time.
VA home loan competent, or a competent VA lender is what I like to say, just in my classes specifically. Just because VA loans are processed differently than other home loan programs, it's a different beast. Not to say that it's harder, it's just different. There's a lot different requirements compared to the more common loans that are done, which are conventional FHA, first time home buyers. There's a little more complexity. So what I've heard and what I've seen from other clients and other loan officers as well is that they know about they say these things about the VA home loan, which are completely wrong. I even see it on Google searches, and some of the articles that clients send me is like, no, that's unfortunately incorrect. And I've dove into the VA lender's handbook for hours, and I've probably read that thing 5 times back to front, and I can tell them, hey, this is where it says you can do that. No, it doesn't say anywhere you can't do that. So it's really important to know the person you're working with, because the knowledge on the loan officer about whatever loan program the client is looking for will either limit the client's ability to do something or give them more opportunity to do something based on the knowledge of that loan officer. And also impacts you, right? As a realtor, as a real estate agent, you're trusting the loan officer to know what they're doing on that specific loan program, back to front. So there's a chance that someone might say something that's completely incorrect, and then what they said makes the client now think that they're ineligible when they're actually not.
Correct.
Which is unfortunate, right? And I've been told those as someone who's a veteran who has used their VA home loan, that, hey, you can't do these things, or we don't think you can do these things. I've just been more of a cowboy about it and just went to go test it out. So there's some people who are just been told, like, hey, you can't do this. We're not going to give you a pre-approval letter. I had a bank that told me that I can't do it, but gave me a pre-approval letter anyway. So that's their fault, I guess.
Yeah.
Okay. Now, does eligibility ever expire
No,
for a veteran?
no. They have it for the rest of their lives. There's things that can change their eligibility. Like, for example, like as soon as they become eligible after 90 days of service, or their service, or in their national guard, obviously that's the different requirement. But once they've met that minimum eligibility, they become eligible. They can use it. But in the example of, let's say, a regular active duty service member, let's say they're active duty, they've used their VA home loan, but unfortunately what happened is that they got a dishonorable discharge. They lose their eligibility completely once they get out. So that's an example, but it's not really an expiration. That's just them losing their VA benefits, because whatever choice that was made. But yeah, they have it for the rest of their lives. I mean, I've had VA clients that have used their VA loan for the first time 5 years ago when they served in the Vietnam War. So
yeah,
and that guy was like 75 years old. So never too old.
Yeah. I see that too, and that's unfortunate that they hadn't taken advantage of it. Much.
They didn't even know about it. That's what's crazy.
Yeah, it just blows my mind. How does that happen?
Well, unfortunately, it has to do with education. As someone who's also a service member, I didn't really. So I've used my VA loan twice. That's and I used it when I first, about 9 years ago, when I was 4 years into my military service. I used my VA loan for the first time. Unfortunately, I didn't know I was using it until about 2 years later. No one told me. Well, I'm sure it was on the documents, but no one actually sat me down and like did some kind of education with me and say, hey, did you know you have this benefit? This is why this benefit is great. These are all the things you can do. I wish I had me. Basically, I wish I had me who could sit down with someone and say, hey, you can do these things, you can do this. Hey, you're a single sailor, you should look into like renting homes, things. Not that any of the decisions I made when buying a home were something I regret. They've all worked out extremely well for me, but I could have been also more knowledgeable about my choices moving forward. But the main thing is that as veterans, we don't really know our own benefits. There's not a whole lot of training or education in the military that we have to tell us how our benefits work. A lot of them are being told that you can't use your VA loan until you're out of the military. A lot of them are being told that there is an expiration date. A lot of them are being told that you can only use it one time your entire life. So a lot of them are being told that you should use it for the house you are going to be in for the rest of your life.
Wow.
So they're not seeing it as a tool. They're seeing it as this one-time punch card use, when it's really quite the opposite of it. So it's really unfortunate that that's the information that's being spread out there. We call it tribal knowledge. So it's being spread by people who have used the VA home loan before, or they've been told by loan officers who are not very good at VA loans, and then this client is perpetuating that information based on what they've been told, it's just so sad, because ultimately the information should be coming from either the VA, which the VA only has so much resources. That's unfortunate. They're only doing their best. But the other unfortunate piece, which it's easier to change, I think, is the education that is being sent out to the real estate community. And that's what's tough, is combating a lot of negative narratives when it comes to the VA loan. And also some of the loan officers that do VA loans aren't as knowledgeable as one might think, even though they're in the business.
Right.
So
right.
yeah, it boils down to education.
I completely agree with that. And I have a couple of questions for you around VA loans and stigma that it may have. However, I want to go back. You had mentioned about you purchasing a duplex. So that's a investment property. So um, veterans are able to use the loan in order to purchase an investment property. Is that correct? And
Right. I actually lived in it
what
though.
is investment
That's
property
that's
with
the
the VA loan?
stipulation. So yeah, I lived in it. I moved into it as my primary residence, and then I eventually moved out. And then because it had been my primary residence, I mean, because I showed all the reasons that I was moving into it, all that stuff. I eventually, when I left the duplex, I eventually rented out the other side that I didn't live in. So it's simple as that. That's all it was. There are some extra requirements now with the multifamily that makes it a little bit harder. But back in my day, it was when I bought like 10 years ago, it was much easier to buy multifamily, and it was cheaper too.
Good. And when you say multifamily, does that go up to a fourplex
Yeah.
or is it okay?
I just have to climb by a fourplex last December. So, but yeah, he lives in it. And what's cool about those multifamilies when you buy them is that if they're already fully rented out, you can potentially go a month to 2 months without a mortgage payment. And if they're already fully rented out, you're basically getting 2 months of free rent.
Yeah. Yeah.
So not a bad day.
That's an awesome investment, that's for sure.
Mhm.
Do you have another question?
Yeah. What are the benefits of using a VA loan, versus a different loan?
To put it in a very quick bullet point style, I'd say the cash required to buy a home using the VA loan is significantly less, specifically the upfront cash, like cash to close. So, of course, you still have closing costs. Typically, the cost to buy a house with any kind of loan, or really just any house, really, is the cash upfront the closing costs and the down payment, right? The main thing with the VA loan is that typically, most times, 99% of the time, there's no down payment. And down payment for a lot of home loan programs can range from 3.5% to 5%. Yes, you can go through home buyers education through the state to get down payment assistance, but those programs, they aren't the most ideal programs just because they have extra requirements. There's extra fees that are added on top of that, so on and so forth. So not the most financially feasible option when you go to those, but those are the only available options for those who've not served in the military. So they don't have to go through that down payment assistance at buyer's education if they have the VA home loan. And so that makes their cash to close to include closing costs significantly less. And what's nice about closing costs is that depending on the market you're in, you could get that paid for by the seller, some of it to all of it. So there's a chance that when you buy a house, you have to spend any money, which is kind of a cool opportunity, which is, I'd say right now, about 50% of my clients who are able to buy a house with zero closing costs, which is really, really cool to kind of think about. You buy the 6-figure asset that appreciates based on the value of the asset, not the money you put into the asset, right? Because that's how most investments work. It's all about the money you put in. What's nice about real estate is that your appreciation is based on the value of the asset, not the amount of money you put in. And you did it basically for free, which is kind of a cool thing to say. Which I don't think a lot of people understand that aspect on how important that is, even though it's a long game. So that's the one bullet point, is the amount of cash required upfront to buy a house is significantly a lot less, and can be potentially zero. The next one is that there's no mortgage insurance. So the monthly payment, well, I'll just say overall it ends up being the monthly payment being significantly lower compared to other home loan programs. 2 reasons. Mortgage insurance. VA loans never have mortgage insurance, and mortgage insurance varies based on credit score and the loan program. So the lower your credit score, the higher your mortgage insurance. And the reason why you pay mortgage insurance is because those loan programs have to have an insurance policy for those who put less than 20% down. For in the lending side, anybody puts less than 20% down is considered riskier, and have a higher risk for foreclosure. So that's why they have an insurance policy. So in case there is a foreclosure situation, the lender can pull out an insurance policy and maybe be able to kind of help with the potential losses on the property when they take it back. That's what it boils down to. But with VA loans, because it's called the VA Home Loan Guarantee, the VA helps cover a guarantee portion of the loan amount. Borrowers on a VA loan never pay mortgage insurance, which makes the monthly payment less, or more of their monthly payment goes toward the loan, right? The second